Good afternoon, ladies and gentlemen, and welcome everybody this afternoon to this Markets Now session. It is the 5th of March already, and incredibly, it's about 17 or 18 degrees, bright sunny weather out here. It's at a level where I've actually seen people around here wear shorts at the moment. So it's completely weird considering a few years ago we had about a foot of snow this time of year. Nevertheless, it's bright, it's sunny, everybody's feeling good, which is a great thing to have. Obviously, after living in a period of darkness around here in England. So, in terms of the markets, what's going on today? We've not got a great deal on the horizon. I've been checking out the Forex screener, having a dig through just to see where our sort of volatility is. The biggest mover of the day is a 0.6% move in the AC. But actually, after seeing the move myself, it's been more of a push to corrective formation, and it's not really making any kind of significant progress at the moment. I have been keeping my eyes open for obviously where the volatility is, trying to come up with some decent environments for us to be trading in in terms of the market state structure. But I mean, honestly, guys, it's just a bit of a crazy fest out there at the moment. Gold still in a really tight range. We've got a couple of like outlier candles, but for the most part, it's just not done anything this week, has it? Right from Monday right now through to Thursday, we still haven't broken free of this tiny little range that it's been trading in. We have the DXY, which is ranging as well, even up here on the daily time frame. If we break it down on the 15, we can see that the market's just not got any kind of momentum in here at the moment. It's painful. It's painful at the moment, is what I'm feeling. I just need something to do, you know. I need something to focus on in terms of our CFD markets. It's not that I'm not busy behind the scenes, and to be honest with you, the lack of CFD trading I've done at the moment has been paying dividends in other areas of the business that needed my attention. But you know, when you do live events and you need to be looking at you need to be looking at where the action is, it's painful. It's painful being me. Good afternoon to you, Corey Tim. Good to see you, buddy. So yeah, it's a difficult one at the moment, team. None of our major trading assets that we look at, they're just not kind of making any significant plays, and we just have to be. I keep saying it every single day. We have to be patient. We have to wait for the market to bring us the opportunities, and then we'll be ready to take them. I think it's safe to say that we're all pretty much ready to jump aboard something, but yeah, we're not seeing it. We're not seeing it this week. This week is just not showing us the direction. Every asset that we're looking at the moment, we're just kind of snail's pace, no matter where we're traveling. But it's okay. It's just part of the process. And even though it seems day to day when we obviously come online and we carry out these live trading sessions and these prep sessions, it seems like it's going on forever. But actually, in the grand scheme of things, it's been a few weeks. So it's not really, it's not too much to moan about, I don't think. But yeah, it does seem like it's been a lot longer when we're when we're trying to find where the volatility is on a day by day basis. Hey, good evening to you, Braden. Good to see you, buddy. So yeah, that's about where I'm at the moment, team. If anybody, I tell you what, I mean, I'm more than happy throw a little bit of a spanner in the works. And I'll just do, up until the point where we're ready for the US indices. Of course, we're going to be trading those US stocks like they've gone out of fashion at the moment because we often get the moves that we like in the afternoon. But instead of me reeling off stuff that I find interesting, which frankly at the moment in the CFD space is very, very limited, how about you guys shout out some bits and pieces if you've got anything going on at the moment? Any pairs that you've been looking at that you maybe have looked at opportunities in, or at the end of the day, it'd be good to hear what you guys have kind of been going on. And it helps me out a little bit when I don't really have too much to talk about, and I don't want to waste people's time. And I don't want to waste time and just come on here and chew the fat for the sake of it. Excuse me. Oh, look. Braden's got himself some funky chart colours. Let's have a look at this one then. NZDJPY. Awesome. All right, so we've got very nice strong breaker structure, perfect liquidity placement as well on that one. Beautiful established range. And that was between what 28th of Feb and the 4th of March ish, maybe halfway through the 3rd of March. Yeah, that's looking really good actually. And this is exactly what I'm talking about. That's exactly what I'm talking about. So let's have a look at that NZD-JPY. Yeah. Okay. So the breaker structure for this one, mine's a bit wide on that, isn't it? So you had yours, and yours was up. So let's just copy what we're looking at here. So that's about there for the BOS. Then you have your bar, which is set here, which makes that makes perfect sense, to be honest. Yeah. And then you're looking at the highs up there, which is exactly the same. Yeah. That's a lovely little trade idea. Yeah, really, really nice. Back in structure here at the moment. Break through the breaker structure point. Make sure we've got the commercial longs on side. 93.50 entry, 93.25 stop, and 93.65 target. You're looking at a decent 1 to 2.5, maybe even a 1 to 3 out the back of that. So yeah, that's a really, really nice idea, mate. Well done. Yeah, well done for sourcing that. Really nice. Yeah, really, really nice. The problem is, of course, is it going to trigger? Yeah, that's the thing we've all got to be. That's the thing we've got to consider. Is the damn thing going to go, or are we going to get very much the same thing that we've seen all week, which is yeah, the blasé kind of sideways motion. Hey, good afternoon, Deep. Yeah, good to look. It doesn't good to look at doesn't mean much. Yeah, yeah, ain't that the truth? Yeah, that is the truth of it right now. Let's check out the old econ. So today, what do we got? We've got the BOT for Aussie land. That was already out. We've got nothing else. I know we've got some smaller outliers to consider, but not really in terms of driving market sentiment today, unfortunately. We did have the ECB's European Union Donnery speech. That didn't do a damn thing, did it? We did have the MPM, actually. That's tentative, though, isn't it? That's kind of ongoing. And this afternoon at 1:30, we did have continuing jobless claims that came in at 1.86, and that was an increase. Oh, no, not really, to be honest. It was completely stable, as it usually is. The initial jobless claims was completely stable as well. Incredibly, I tell you what, that's a shock. The initial jobless claims came in at 213k, which is identical to the previous figure. That doesn't happen often. Non-farm productivity, 2.8%. That's down from 5.2. No wonder gold had a little bit of a spat as a result of that one. That's why we saw this 15-minute candlestick just dip down here for a moment. It's gone completely stationary, though, back into its previous trading range. So yeah, there's really not to even mention on here, to be honest. This afternoon, 5 p.m. UK time, we do have ECB President Lagarde speaking. That might be worth. I wouldn't necessarily say it's worth. I wouldn't necessarily say it's worth like tuning in on. But it would be worth kind of catching up on that tomorrow, possibly having a think about what she says. But guys, listen, we are on Thursday. Remember, we are on Thursday, which means we've only got one more day for the big NFP session. Now, of course, I do historically like to ramp up the hype on these NFP sessions because I get myself a little bit overexcited. And it's even worse, I must admit, when there's nothing going on and I'm looking for any reason to find some volatility in the markets. But yeah, I mean, tomorrow's NFP. We could be in store for a big day tomorrow. It could well be. So we'll just have to sit tight and look ahead for tomorrow. On top of the NFP tomorrow, we've got some other bits and pieces because we actually have the employment change data for the European Union. This is out at 10 a.m. in the morning. We do have obviously all the average hourly earnings data, and then backed up by the NFP participation rate, and so on and so forth. All of the retail data for the US is coming out tomorrow afternoon, which then ties off the end of the week. We don't really need to be concerning ourselves with any of this from around 3 o'clock onwards. The only thing I would maybe say is keep an eye out for the Ivy PMI, but honestly, team, what are the chances we're going to be stuck in something with the Canadian dollar at that time? The only reason I did mention that is because it's only a short time after the NFP, and of course, one of our trading assets is probably going to be the USD CAD. So it's always worth having that in the back of your mind because the Ivies, they can ping the CAD from time to time, you can get a little bit of a 15-minute spike as a result. It's nothing that we would want to cover on a weekly basis, for example, but it's just worth highlighting. In terms of so that's basically that. So that's where we are. Just on off topic, has everybody in here seen the latest video that I did yesterday? I say video, the latest live event that I did yesterday morning. Now, has everyone got that on catch up? No. Okay, that's good. Homework tonight, D. Good man, good man. Okay, well, if you haven't, consider this your heads up. Braden, you haven't yet. We'll watch on the weekend. Yeah, good man. So yeah, it's in the investment. It's in the investment hub. It's in the portfolio chat. Please head over there whenever you can and have a good watch of it. It was a really good session. I really enjoyed doing it. And some of it might seem rudimentary at this stage for some of you. I don't know your personal backgrounds of the equity space. But regardless of that, if it is rudimentary or not, it will be good to build the foundations of what we're trying to aim for down the line. It really will be. It's been really well thought out. As I mentioned in the thing, if I offered that as a private class or anything, it would, I would be charging a lot for it. It's a lot of really, really good content, and you guys, as part of your package, get it entirely, well, for no extra cost. It's just in your package. So do make the most of it. Really, really do try and make the most of it. Get a pen and get a pad and a paper. Get a pen and pad, and make the most of it because there's a hell of a lot in there. Hell of a lot in, and with a lot on the horizon as well. So Cora Tim, let's have a look at what you've sent in. So we've got the GBP, we've got the GJ, pound against the yen. Yeah, I see where you're going with this one. Okay, so we're looking for a rejection from liquidity for a move back down at the previous lows. Let's check it out. Pound against the yen. Yeah, let's just drag my bits across. Yeah, so I mean, you're absolutely right, buddy. We're looking at the same thing here. Pound against the yen, rejection from the highs, big liquidity on top, cash rich down below. Makes perfect sense. The breaker structure for this one is exactly where the price line's trading at the moment. So if we just draw like a nice, really thin little bar just across the top there, and then we'll ultimately be looking for the push up into money, grab the shorts, and then it bombs away. Down we go, back down to 209.60. Really nice little trade idea. Yeah, I've got no qualms against that one at all. I'm not going to be releasing these as, my own official UTCF ideas. Although, that's a difficult one, really. At the end of the day, I mean, if I take the trade, it has to be released because then it goes into because then it will just feed through into the track record anyway. And then what I don't want to do is take a trade idea that ends up in the track record and then I'm penalized because I didn't release it as a trade idea, which is kind of a confusing one when it's you that's brought it to the table. I tell you what I'll do. I know exactly what I'll do. I'll release them and then I will credit them to whoever's posted it, and then you guys can take some of the heat when they go wrong. How about that? No, it'll be fine. It'll be fine. But I completely agree. I mean, they've got the UTC seal of approval, so I completely agree. I mean, I'm being serious. These both the NZD JPY and the pound against the yen trade ideas, they're trades that I would personally take. So you can rest assured that if I'm putting my money where your mouths are, then there's a level of confidence there. There's a level of due diligence that's been done, and I agree with the setup. So yeah, not bad at all. We are looking at 2 yen trades, and we're looking at trading a bullish cross against the yen. We're looking at trading a bearish cross against the yen. So there's kind of pros and cons against that. Obviously, it's nice to have something hedged. We're offsetting some of the risk. But also, both positions are very close to triggering. It's not like we have too much margin. It's not like we have too much margin here. If you did want to take both, there's not a lot of margin to play with before the trades will trigger, and then we could end up with both trades triggering and being a little bit of a state. D has raised a valid point. And the way we could run both at the simultaneously is to reduce the risk per trade, considering they're both yen crosses and we're buying one, we're selling the other. So you could just bring one down. If you want to get really technical about it, the NZD JPY in particular has a greater margin, I believe. Well, it's kind of similar, really, isn't it? I mean, yeah, they're quite similar. What I was going to suggest is whichever one triggers and starts moving, you could do a partial on the opposing trade, the one that's not doing well, and add the liquidity from that trade to the one that's winning. This is, I don't want to go down a open Pandora's box with you, because I appreciate everyone here is at different skill level, which is absolutely fine, and that's as it should be. But for example, if the pound yen comes up, we hit liquidity, comes back down, but in that process of time, the NZD JPY is triggered. But then the market starts coming back down again, the yen starts pushing, the pound starts crashing, things are looking good, and the NZD JPY is coming into stop territory, or it's running a loss. You could partially cut the NZD JPY, take the money away from that one, and put 0.1 or 0.15 on top of the pound yen. Increase your risk back up to the 0.25% of the full risk exposure, and then you've got yourself a nice little win at the end of it, and you've kind of mitigated the loss from the NZD JPY. There's lots and lots of ways that you can manage it, and it sounds convoluted, but honestly, team, all we're doing here is we're talking about a couple of clicks of the mouse. Right? It's really doesn't actually, amount to too much work. So there's just something to consider there. All easily done on MT5 as well. All completely easily done. So that is something to consider, possibly. I think I'd prefer that methodology with something a little bit longer rather than these little intraday trades, in an ideal world. But I think right now we can't really be too picky and choosy with what we've got to work with. I mean, we've got 6 mines in here at the moment, and we've got a couple. We've got 2 yen crosses that we're interested in. So it does go to show, considering we've got the best part of 50 FX assets, none of which are bloody doing anything at the moment apart from chopping around. Right. Okay. No, that was a good discussion. Yeah, that was a good discussion. Thank you, those of you who have posted your trades in. It was good to see, and I think they're both really good. They've both got legs. So we'll see how they fare. We are at 10-2 now, so it's a good time. We can pop up to the US indices, get some work done on these, and get us ready for this afternoon's session, I hope. Yesterday's market open was, I would say, what's one word I could sum it up in? Deflating? Disappointing? It was an initial bout of chop into significant range, and then back into some chop at about 3 in the morning, and that was the sum result of yesterday's market open. I ended up having a short in the S&P 500, which is my only trade yesterday afternoon, and my short ended up as a loss. Way, so this is the short that I had. Nice little trigger point in there in the standards. Good break of structure from the range. Great target profit, and the damn thing hit me out almost instantaneously, and I just didn't feel. I just wasn't down on anything then. That was basically my run yesterday. Markets did have a little bit of a push. We pushed through liquidity, as you can see on the S&P. We saw this on the other assets as well, but then that died a death very, very, very quickly. And we went into this sort of ranging motion all the way throughout the Asia session, the evening, Asia, back into the morning, early hours of the morning, until we got to around 8 o'clock this morning, where we had a little bit of a push again. And that's basically where we're trading right now. Now, let's start from the top here. Dow Jones at the moment, currently trading at 48.48. Nothing's really changed over and above what we were looking at yesterday. The problem is the market hasn't made it anywhere. So day to day, we're looking at these breakouts. Day to day, they're all looking the same. It's the same setup just being repeated over and over again. And the problem that we've had here is that quite a few of them now haven't worked out, but we haven't made any fresh margins to trade. There's nothing fresh in terms of the TA that we can enforce here because the market hasn't moved anywhere. So there's diminishing returns on the current state structure of these US indices, because the probability is that it's probably just going to knock us out again. Now, we can't live our lives like that, of course, and we've got our risk in check. We're not doing anything untoward with our risk management, which is always the case here. But I don't know. It's just, is it worth it? I suppose. I mean, looking at this NAS 100, there is the possibility for that run back down to 2485. We have a now major technical risk factor directly slap bang in the middle of the margin there. Now, the true margin, the true trading margin, right, is from around this area in here, right? This is where the inflection points in the market are. This area down here is at the other end of it. So really what we're looking at here, the trading margin, this is the true trading margin. And this is a really nice big margin to utilize. But day to day, when we're considering the market opens and the kind of volatility that we receive, we're not seeing anywhere near what we need to be able to cover the margin from around 24.46 up to the high at 25, or vice versa, all the way back down to the lows. We have to take snippets of it. And I really am disliking what I can see from this area in here. This is not nice at all. Yesterday in the NAS 100, the initial candlestick broke free, came right the way back down to stop out, but it did continue going, and it did have a nice run. That's not a bad run at all. But where we're trading at the moment, there is a huge risk that we're going to come down to the previous low. It's just going to reject it. I think, again, I'm going to refer back to what Dee's actually said this afternoon, and that is about the risk sizing. Perhaps, and I know this isn't something that we do very often, I do appreciate that, but perhaps in this climate at the moment, we go for the aggressive entries, but we do cut that risk down. So what we're going to do is look at very high risk reward ratios, 3.51 to 1, sorry, plus. But we're going to bring that risk down to 0.15% per trade. So if we're winning, we're still winning a nice return. We're still getting a solid return. But if we're losing, we're going to be losing less. And I think I just think that's quite wise at the moment, especially with the sort of degree of quality that we've seen from the US markets. So let's just plan this out. We've got the move back up, liquidity achieved. We come back down. That's going to be mandatory, unfortunately. We can't just take the short from where we're trading at the moment. So we'll look at the market coming back up to the highs. The trading opportunity entry just via the breaker structure. We've got the TRF, which is down at 24.95. We'll get a little, we'll get a couple of quid in the back pocket before we get there. Remember, this is a 15-minute time frame, not a 1-minute chart. So the margin between 25 and 24.95 is going to be good enough for some money to be generated. And then we're going to have a stop loss. And the stop loss for this one in particular, I would have it about, I'd say probably about 25.05 there, because that's going to account for quite a few of these highs, actually. Not all of them, but quite a few of them inside the stop loss. And that's going to yield a 1 to 3.57. So that's what I would like to see for the NAS. Now remember, team, and I'm going to make this absolutely clear as I can possibly can. Reduced risk 0.15% per trade. Okay. And that's what we're going to do on that one. Now let's move, let's go down. Let's see this Dow Jones quickly. Yeah, so I think look, we can't do anything more than what we've already done in terms of the technical analysis. So there's no point deleting our old work because it's the exact same stuff that I'd be drawing in again here. There's just no change. What I might consider, however, is a move between 48.54 and 48.68 and look to trade this area rather than the one up at the highs, which has been problematic. Because we've had a couple of good runs up here before. It's been quite a few actually between these 2 points in time. So it might make sense to just look at a very short-term intraday trade from there to about there with stop losses at around 48.49. That's going to yield you guys around a 1 to 2.65, which is not bad at all. In terms of reducing the risk on this one, I'm not sold on the need to reduce our risk per position sizing on this one. The reason is shorter margin, less aggressive. We're trading away from big liquidity. So I'm probably not going to feel the need to bring that down to 0.15. NAS 100, yes. US 30 Dow Jones, no. Sorry, guys. Just 2 moments. What is that? Yeah, that's fine. Yeah, so that's the way I'd handle that one. So no risk reduction on the US 30 Dow Jones. Does look like it wants to trade lower. But even by the time, if we're considering shorting it from here and taking it back down to there, which was actually a couple of previous nice moves, that's a hell of a long way for the Dow Jones to fall. And I would feel very, very skeptical about triggering a short at 48.20 after the market's been trading high of the day, bearing in mind up at 48.84. That's one hell of a losing day for the Dow, and it doesn't have any major fundamental reason to do it at the moment. I mean, you're talking about close to a minus 2% day. We need to see a bigger catalyst in order for that to happen. So that's going to be the long of the Dow Jones, this one in here. Now, let's get the S&P 500, see if we can lock something in on this one. So we've got this area in here. This is obviously the current floor for price on the S&P as well. We have that as the ceiling. Could we see? So we got an inverse head and shoulders there. Midpoint of a W reversal in there. And then we got some reactionary parts of the process taking place at around 67.90 there as well. That's not bad. That's not bad. That's a good enough level to use for a target profit at least. The break of structure I'm going to use from yesterday's trades. So I'm just going to bring that one over. That's going to be the BOS. And then the trade, considering we took a loss yesterday and I wasn't looking for hardly anything at all in the S&P, I'm going to have the target profit down here today. I'm going to have the stop loss just above lows 1, 2, and 3. I'll just outline them for you. Okay, so that's lows 1, 2, and 3. And what I'm going to do is have my stop loss above, and that's going to be about there for a 1 to 3.1. And that's going to be the S&P trade. Now for this one, I would bring this down. We're going to do a whole array of different risk sizing. We're going to have a 0.25. We're going to have a 0.15. And on this one, we're going to sit in a happy medium. And that is going to be reduced risk at 0.2. 0.2% on the S&P, 0.25% on the what was it? The NAS 100 or the Dow Jones, and the NAS 100 has no risk reduction at all. So the US 30 Dow Jones. No, sorry, I beg your pardon. It was the NAS 100. NAS 100 is 0.15. S&P 500 is 0.2, and the US 30 Dow Jones at full risk. I think we'll be good. Yeah, I think we'll be good. I think that's the plan. Right, team. Well, we are at 2 o'clock on the dot. You've got a half an hour before the bell rings. We all have our plans. We know what we're doing. You've also, thanks to Braden and Koratim, have a couple of extra opportunities with the Japanese yen. Not a bad little basket for an afternoon. Oh, hang on a minute. We've got something else. NZD USD. Let's have a look at that. Have a look at the below as an alternative. Excellent. Yeah, sounds good. NZD USD. Great liquidity down at the floor there. Breaker structure looks really good as well. Let's have a look. NZD USD. Okay. So we're looking at buying it back up. I need to open that up, actually. Hang on a minute. Yeah, makes sense. So we've got this massive bar in there. What? Where is that then? I can't see that. Oh, wait. Hang on a minute. That's in there. Wait, this is a... So we're talking... This is intraday then. Very, very intraday. Okay. All right. Yeah, cool. Let's have a look at this then. So, of course, we've got this major point of inflection. That's where that big zone comes from. Unfortunately, I cannot get rid of that. It's too important. It's too much of a big commercial point of interest. It also acted as the floor for the market for quite some time before we managed to get a break through it. And that is unfortunately sat directly under where price is at the moment. Unfortunately for me, buddy, that is a no can do, that one. Not to say that it has any kind of worth nowadays, this area in here, considering it took place back on the 5th of February a month ago. But the fact is, the market is still being reactionary to it. We've got the point of inflection here. We've got the wobble of the price action. We've got the break close and the retest at this area. And we've also had, I mean, these moves are from today. And these moves from today are still retesting that area as a point of liquidity. So I can't in good conscience validate a trading opportunity up to the highs there with this in the middle of it, I'm afraid. But I really like everything else about it. And I mean that. I mean that seriously. I'm not being sarcastic, okay? Seriously, because the breaker structure that you've got, which is outlined about, well, you've got your point of liquidity first of all, which is spot on from an intraday perspective. So that's a really nice area of liquidity. The breaker structure point that you're utilizing for it makes perfect sense as well, which is about there. Your target profit even is really good because you've got the main point of inflection at the highs of the move. You've got the retest of it there as well. The market's come back. We've got the knee-jerk reaction, which means there's commercial short sales in that area there. It all looks really good. It's a very well thought out trade. It is only the fact that we've had this massive, massive move down into this area before, and now we've had recent evidence of price using it again. That's the only reason. So I would still consider this to be very good. Lesson here, if in doubt, always have a little look to the left-hand side just to see if there's any major kind of, major move away or into a particular area that's going to throw a little bit of a roadblock or a hurdle in your trading margins. Okay? Yeah, no problem at all, buddy. No problem at all. Right, team. That's going to be it for me today then. I'm going to wish you all a fantastic afternoon. Enjoy yourselves out there. Hope it's a good one. And if you've got any questions or anything, please let me know. I will update the UTCF alerts in the next 5 minutes with the trading opportunities for you all to have a good rummage through. And let's see, fingers crossed, if we can actually get something done this afternoon. A winning trade right now would certainly brighten my day. So take care, team. Have a good one, and I'll see you then. Cheers, guys.